I'm buying now, December 2020 edition. Welcome in, guys, to today's video. Thank you for joining me on my favorite series I do on this channel each and every month, where we get into why I am buying these three particular stocks in the month of December of 2020. And I just did a little reminiscing, okay? A little reminiscing before I got started with this video. And I wanted to see when I actually started this series. And what I found was I started this in August of 2016, okay? Look at that, over 4 years ago, right? 11,000 views. And then I wanted to see like what happened over the next 4 years. And look at that, okay? In the August edition, 153,000 people watched that video. That is ridiculous, okay? Absolutely absurd. And so, usually I ask you guys for a thumbs up, but give yourselves a thumbs up today, guys, because you guys made this series legendary, okay? Y'all made this series a classic. That's just the flat out honest truth. I mean, from where it started, 11,000 views to 100,000 plus views these videos are getting nowadays. Like, you guys made this series a classic, and I appreciate each and every one of you guys as always. So without further ado, let's start getting this, guys. If you want to join Stock Hub, where you can chat stocks with a ton of other investors out there, it's linked in the description. I will also have that linked as probably the top pinned comment, okay? It's absolutely free to join in there. You can talk stocks with a ton of other investors. I think we got I want to say 27,000 members or something now. And also, if you're trying to apply for my private group, you want to know all the strategies on how I make money in the stock market, what I look for in stocks, and join the private Discord chat, and all those sorts of things. If you want to apply for that, I'll probably have that as the second pinned comment down there. It's also linked in the description, all right? This is completely random, okay? But I just saw this. I was prepping the video, these two guys were racing on lawnmowers, literally out there. I caught them, and then all of a sudden I think they saw me taking a picture, and they were like, split, split, split. So anyway, it's completely random, okay? All right, guys, let's start getting into these three stocks, all right? First one up here is Dropbox, okay? Ticker symbol DBX. Market capitalization of $8 billion on this cloud company. They're more than just a cloud company, okay? $8 billion. I can tell you, Dropbox has me amazingly excited, okay? I am ultra bullish on Dropbox stock in not just the long term, which you guys know I'm a long-term investor. Usually I'm looking out years into the future. But I'm super bullish on the stock in the short term, meaning over the next year or two, okay? Yeah, I did a video very recently that I just released on the channel, basically calling Dropbox my next 3x stock. I was buying even call options in Dropbox stock, and I don't usually do that. Usually I just buy the shares. For me to buy 2023 call options just show how unbelievably bullish I am in this stock in the short term and long term. You guys know I rarely do this, right? I think the only time I can remember making a very short term prediction anytime recently was a couple months ago. I did that video about this stock is going to 2x fast, and that was a video where I went into Nordstrom stock and saying that stock was going to double over the course of the next 12 months essentially, and it did, okay? It already has doubled since that time, and so this is very few and far between that I'm this confident that I'll make short-term stock price predictions, okay? But Dropbox is amazing, okay? So the cloud side of their business, it's unlimited TAM, literally unlimited TAM. And what I see going in the future of cloud, okay, is people need more and more cloud over time. This is not going away. My needs for cloud is way more than it was 5 years ago or 3 years ago or even a year ago, okay? And that's pretty much every single person out there and every single business out there, okay? And cloud, there's a lot of players that play in cloud. Everybody has their different kind of strategies, okay? Dropbox, they love to play in the environment of not just families and families using Dropbox, but small businesses and mid-sized businesses, okay? And when it comes to Dropbox, they've carved out a beautiful niche of just simplicity of using a cloud product, okay? And everybody's been fighting over cloud, and what I see is that market share battle is going to start to end in 2021, and I believe that all the cloud companies are going to start raising prices, okay? They've all battled over market share, and now they realize, if they battle anymore, it's just a zero-sum game, essentially. And so all these players, in my opinion, in 2021 and moving in future years, will start going up on price. Just as, remember I used to be invested in Uber, right? And Uber and Lyft always battling out over market share, and they would never make any money. They would lose money, and they realized that's a zero-sum game. And so, they've started to go up on prices overall over the past year or two. And yeah, I think that's going to happen in the cloud business. So the only difference is the cloud business is already very profitable, okay? Smart Workspace is a brand new business for them. That's collaboration, teams being able to communicate better around projects and project collaboration. This is a huge news growth vector for the company, okay? And it could make Dropbox way more relevant as a company for small and mid-sized businesses than ever before, okay? Not just that, also schools and education. Dropbox is beginning to become a bigger and bigger player in using the smart workspace as well, okay? That's really exciting. Wall Street's not even seeing this, okay? Wall Street's not even seeing that, okay? You want to know what else Wall Street's not even seeing right now? The e-signing of documents business. They bought HelloSign a couple years ago. They've integrated that now very well over the past, 6 to 12 months, and that's massive TAM. All these documents that have been physically signed over the past, 100 years, it's all moving online, okay? Everything in the future will be e-signing of documents. I'm very confident in that, and it's probably gonna be basically, I think, over the next 5 years, everything's gonna move to online signing of everything. This old school stuff, I just, did a signing recently for a refinance of a mortgage, right? And it's still the person has to come to your house. It's all physical documents, man. That stuff's going all the way. That's going all the way over the next few years, okay? You're seeing big publications write articles about the moves that Dropbox is making in terms of their spaces, okay, which is that, remember I talked about that workplace communication and collaboration. Huge growth vector for the company, and that's just something that it's like Wall Street's not even seeing this right now. They usually don't see things until it's right in front of their face, and it's not in front of their face enough yet to be there, but it's going to happen, okay? And when it comes to Drew Houston, the CEO of Dropbox, the founder of Dropbox, he's actually moving to Austin. He's going to focus all around big vision stuff moving forward, which I think is super important. He's going to get out of the whole day-to-day decision making and just kind of what I call a lot of the busy work. Let's put it that way, okay? And I love this move, okay? I think if Dropbox is going to grow into a massive tech company, you got to make this move. It's super important, okay? One of my biggest investments, which is Facebook, I've always loved how, Zuckerberg, he can just focus on the big vision stuff. And then you have Sheryl Sandberg, who's a COO. She really handles a lot of the business work, okay? You just need that right-hand person that they can handle that stuff so you can go after the big vision stuff, okay? I've always loved that. Steve Jobs, he always had Tim Cook, right? Tim Cook nowadays is the CEO of Apple, right? But he always had Tim Cook to lean on and a few other key players that just drove the business, and Steve Jobs could always focus on big vision stuff. I love that, okay? Heck, even in my own life, I hired somebody in 2019, Blake, right? And he's kind of like my right-hand man, so I can just, because all I want to do, I just want to focus on big vision stuff. I want to, pick stocks essentially, and I want to make YouTube videos, and that's all I want to do. I don't want to run a business and do all the day-to-day grind and hiring and all that stuff that you have to do. I just don't have time for that, okay? I like to focus on what I like to focus on over time. So I love that Drew Houston is moving that type of role, because I can tell you, it just ends up a lot better. It just ends up way better than the whole situation where you're drowning in a bunch of busy work, okay? And when it comes to Dropbox, a forward P in this company is 20. A 20 forward P? It's just silly, okay? If we go ahead and we go to Yardini Research, okay, what we're gonna find is S&P 500 large caps are trading at forward Ps of 22, okay? Dropbox is trading under those companies. It's the most disgustingly mispriced stock in the entire stock market by a mile, okay? It's ridiculous. Look at the S&P 500 technology companies. They're trading at forward Ps on average of about 26. Remember, Dropbox was at a 20, okay? As far as growth companies, which Dropbox is a growth company, they're trading at over a 27 forward P. And once again, Dropbox was at a 20. And look at the growth going forward for Dropbox. About 15% this year, 11% or so next year. Very nice growth numbers. Never mind if some of these prices start to raise over time. Over $1.2 billion on the balance sheet, cash and cash equivalents, and short-term investments. So the company's cash loaded to the sky. DocuSign, they're the biggest player in e-signing of documents, okay? As HelloSign gets more and more built out and Dropbox starts to break out those numbers more and more, which I think is going to happen over the next couple of years, Dropbox will start being comped more and more with DocuSign, okay? DocuSign trades at a $42 billion market cap, okay? If HelloSign can clearly emerge over the next couple of years, which I think they will, because of their integration with Dropbox and how well Dropbox just executes, I believe HelloSign's gonna emerge as that number 2 player. And if they can, then Wall Street has to start to respecting that, and then you have to start comping against DocuSign, which is huge. So then you got the workspaces business, you have the cloud business, and then you have the e-signing of documents. I mean, this is a very, very exciting company, okay? Dropbox, recurring revenues, the holy grail of business. This is why Apple has seen the PE ratio that Apple can command nowadays versus what they could command a few years ago has gone, and expanded tremendously, mainly because a lot of people are looking at the services side of Apple's business now and they're like, oh my gosh, it's just a recurring revenue stream, and people love that, okay? Intuit, which owns QuickBooks, always a business that's traded at a huge premium because of recurring revenue, okay? Microsoft, there's been a huge step up in how people value Microsoft stock, because at the end of the day, people look at Microsoft recurring revenues. It's beautiful, okay? Dropbox, all recurring revenues, month after month or year after year, and they have no customer concentration. So that's another beautiful thing. A lot of these business models, they're very dependent upon, a few customers, let's say. Dropbox is not like that. If Dropbox lost some customers, it's not the end of the world for them. They have no customer concentration and recurring revenues. It's one of the most beautiful business models I can find out there, never mind the valuation, okay? And so when I look at Dropbox stock, it's a stock ready for liftoff, okay? And when it lifts off, it's not coming back, okay? It's not coming back. That thing will take off and it's not coming back. That's all I can say about that. People will be looking at that one, they'll be like, oh man, is it gonna fall back to $19 and $18 again, man? Yeah, when that thing goes, it's gonna be long gone, because once a stock starts moving, that's when Wall Street really starts to wake up and find it. When Tesla made that first huge move initially, from on a split adjusted basis from about $250 to about $600, $700. That's what woke Wall Street up. And then they started coming in droves, obviously, this year, okay? And so will Dropbox stock 5x to 10x its stock price over the next 5 years? In my opinion, it will. In my opinion, it will. When I just look at how cheap the company is, when I look at the business model overall, all the different growth vectors for the company, Drew Houston just focusing on big vision stuff, there's no doubt in my mind that this is the type of company that it will 5x or 10x its stock price over the next 5 years, okay? Now, I think a 2x to 3x is in the bag. That's just my personal opinion once again, but I think a 2x to 3x is in the bag for this company. 5x to 10x is what I honestly see for this company over the next 5 years, okay? And you can tell I'm putting my money where my mouth is with this stock. I mean, this isn't a stock I've held for very long, and I've been building out this position heavily over the past month or two, okay? I mean, look at this. In the public account, for instance, I hold $98,000 worth of shares in there. In my main private account, I hold $137,000 worth of shares in that account. And then on top of that, and as far as options go, I own another $26,000 worth of options. Like, yeah, this is a stock I'm buying heavily over the past month or two, including I actually just bought some here today, and I plan to continue to buy this one because I just think the risk reward is literally the most attractive I can possibly find in the stock market. So yeah, I'm slightly excited about this one, needless to say, all right? All right, guys, let's get into number 2 of 3 up here. If you follow me on Instagram, I gave you a little hint last night in my Instagram story, and yeah, it is Beyond Meat. This is another stock that, this one I've really just started buying recently, like the last 2 or 3 weeks, okay? And look at how aggressively I'm already adding shares. I already hold $41,000 in the public account in this. In my main private account, I already own almost $100,000, a little under 100K worth of Beyond Meat in there. And that's in a matter of just like literally I've just been buying the stock for like 2-3 weeks, and I'm adding so dang aggressively, and I plan to continue to add this stock very aggressively, okay? Beyond Meat, you guys should know them as the vegan meats company, okay? Plant-based protein meats, all right? They just announced a huge deal with Pizza Hut very recently. We got that pizza, I think, the second day after it had been launched. And yeah, I enjoyed it, and needless to say, I enjoy the Beyond Meat products. I'm super excited about this company. Here's what we have happening with Beyond Meat, okay? First off, 2-3 years ago, no one had heard of this company unless you were super involved in like the vegan community. No one ever heard of Beyond Meat. They had no clue about this company. And now, if you go into your average grocery store, good chance they carry Beyond Meat now. They might not carry many different types of products from Beyond Meat, but good chance your local grocery store is carrying Beyond Meat products, okay? And so more and more stores are carrying these products now. more SKUs will continue to come for this company. Like if you start carrying the burgers, next thing you know, you start carrying, the other kind of meats and the other sausages and the pre-made type stuff and the taco mixes and all these sorts of things and breakfast sausages. So more and more SKUs will continue to come. This company's innovative. They'll continue to come out with new products, packaging, everything across the board. And then on top of that, more and more restaurants will continue to carry Beyond Meat products, okay? And I'm talking, big restaurants, I'm talking small restaurants, and I'm talking about fast food locations. I mean, that Pizza Hut deal, can you imagine how big that deal is? I mean, we're talking about thousands and thousands and thousands of locations overall. And I didn't even include this in the slideshow, guys. But keep in mind, Beyond Meat has a very good chance to get the McDonald's contract, okay? Who knows, nothing's for certain, but Beyond Meat has a very good probability of getting the McDonald's contract. McDonald's, that opportunity dwarfs any other fast food location out there, okay? Just keep that in mind. Very good chance. It's a possibility they get beat up by another company, but very good chance they win, okay? I mean, that's massive, okay? And it's not just in terms of the product you sell, but it's the branding. That's the biggest part. It's so much marketing, free marketing. It's amazing, okay? I love the way they do it over there, all right? Now, as far as growth goes, this is a fast-growing company. Current year, expected 37% growth. Next year, something we love to see, and a re-acceleration of growth. One of the most powerful things you can see in any stock, okay? 51% plus revenue growth expected in 2021 for this company. And then just imagine for a moment if McDonald's and them did a deal next year. And, they got, massive distribution all over the United States and maybe even worldwide to locations. Like imagine what that does to the business model. Imagine what that does for revenues next year and the year after and for future years. Like that's just crazy, right? If we look at a world map, here's kind of the way I see Beyond Meat's opportunity. Their main market, obviously, at least in the short term, is North America. No doubt about that, okay? Then from there, it's all about Europe. Right? And Beyond Meat will continue to expand in Europe. Their business is so small internationally. I mean, their business is still small in the United States. Remember that, okay? Let's just keep that in mind. That's their main market, but it's still small even in North America. The North American build out over the next 5 years is going to be massive, okay? Then Europe, okay? Europe's is just a huge opportunity for Beyond Meat in Europe, all right? Then after that, China. And here's the thing, guys. If they can be successful the way they've executed in North America so far, China could be the biggest market in the world for this company. I mean, keep in mind, we're talking about 1.4 billion people in China, okay? And, a lot of people emerging into the middle class. And you know what? Beyond Meat right now, they're building several factories in China. I mean, if you think the opportunity is big for this company in North America, I mean, expect a 2x to 4x type opportunity in China for Beyond Meat long term, okay? And then the sneaky market that I don't think a lot of people are even thinking about is India. I think there's big potential for Beyond Meat in India long term, okay? And that's another market that could be just massive, okay? And obviously, this should be a company that expands all over the world. Those are just kind of the main markets I'm thinking about for the next 5 to 10 years for this company. And remember, Beyond Meat, this was a little teeny tiny baby company just a few years ago. 2017, they're doing $33 million of revenue. 33 million, and now we're talking about a company that should do 600, 700 million dollars of revenue next year. That just shows you how fast this company is growing, how much scale they're getting to, how much marketing exposure they have that people are going out of their way to buy the products. And keep in mind, if people like the product, they buy it again and buy it again and buy it again. That's a beautiful thing about the food business. Everybody has to eat. And when people like a product, they just keep getting it, right? That's why Coca-Cola and Pepsi trade at such premiums. They have great brand names. And at the end of the day, somebody likes to drink Coca-Cola every day or Pepsi every day. They got to go buy Coke and Pepsi if they're out, okay? So really, really powerful. And when we look at that growth rate there, right, from 33 million to 600 plus million, I think that's honestly the reason Very Good Food Company is moving up so much, which is my other speculative vegan company, right? I mean, look at that one here today, 27% gain. I think everybody's just, jumping on that one now because they realize the market for this company is massive long term, and I think that's why you get, look at that, $48,000 gain today. I saw that number and I wanted to bring it into this video, and I was like, man, You know, sometimes I see these numbers and I just like, I feel like I take it for granted a little bit. You know what I mean? Like as the numbers get bigger and bigger. And I remember like a decade ago, I was so happy because I just got a job that paid like $40K a year, right? And here we are, one stock in one day, $48,000. Like that's just crazy. But a lot of people want in on the next player in that market, and they feel like very good food company could be potentially the next Beyond Meat. And so, you know, that stock is just, you know, incredible, right? When it comes to Beyond Meat, Ethan Brown, you know, this is one that if you're going to place an order for the stock, okay, and you want to actually be an owner of this company, you've got to believe in the guy in front, right? Because the valuation's rich. Ethan Brown, I got to say, of the companies I hold, he's one of my favorite CEOs out there. You know, and he might make it to the top soon, okay? I think he's an absolute visionary. I've watched countless interviews and listened to conference calls and everything with this guy, okay? I think he's the most visionary guy in the food game, point blank, period, okay? I think there's more innovation going on with him and the company in general than any other food company in the entire world by a mile. And the food space is a hard space to change. Let's be quite honest, right? People get used to eating certain things and they just, you know, that's just the way they are for the rest of their life. And so for somebody to come in and say, I'm going to change up this whole game, it's special, okay? And here's the thing, it's not just about being a visionary and having all these visions on, you know, how to do this and do that, but it's actually making it happen, and he's actually doing it. So it's incredible to watch. You know, it's kind of like a lot of people say, are you betting on the stock, you betting on the jockey, betting on the horse, or betting on the jockey? And in this situation, man, it's both. But I got to say the jockey is pretty special, and I think he will be respected. You know, if we fast forward 10 years, I think he'll be respected as one of the better CEOs out there, in my personal opinion, okay? And I put out a video 18 days ago on Beyond Meat that went super in depth, okay? That was like a 35 minute video just on Beyond Meat stock. So if you want to check out that was posted here on the main channel. You can, you know, watch that video and go much more into it. But at the end of the day, I called that stock my next 10x stock. I said, this is my next Tesla stock. And the amount of similarities I find between this stock and Tesla stock is immense. Tesla's a stock that has gotten me over 10x now, okay? Over 1,000% gain. And I see definitely some very similar characteristics between the companies, right? Both companies can have some haters and shorts. Both companies kind of are, you know, emerging as like cult followings. Obviously, Tesla's way further ahead of Beyond because it's just a much older company than Beyond is. But I definitely see a cult following emerging around Beyond Meat. And obviously Tesla's, you know, I feel like the most cult following stock out there, certainly the most cult following stock I hold, right? Both companies have a visionary in front of it, right? Elon Musk is obviously further ahead of Ethan Brown in terms of just like the way he's viewed, because it's just been doing this for way longer. He's been in the public eye. Like no one heard of Ethan Brown before a couple of years ago for the most part, right? And so both companies have visionaries in front of them. Both companies, when people are buying these stocks, they're not selling these stocks. They're buying for the long-term opportunity, which is very, very exciting. That's exactly what I feel with Beyond Meat. I think people are buying this one for the long-term opportunity, and they're not going to care if Beyond goes to 150, 250, 350. In my opinion, they're probably going to be holding for the long term with this company, which is extremely exciting. And there's multi-layered growth. I obviously saw a multi-layered growth with Tesla, and I definitely see with Beyond there being a multi-layered growth approach where it's like different products, more products coming out in the future. Like if you think about how many SKUs this company can get in long term, it's crazy, right? And then you think about they have the retail side of their business, and then the restaurant, and then the fast food side of their business. So it's multi-layered growth. So many dang characteristics. It reminds me of Tesla. It's a stock that reminds me most of Tesla in the stock market, in my personal opinion, okay? And so, yeah, Beyond Meat, I'm super excited about that one. So Dropbox and Beyond Meat are the automatic buys for the month of December. Those stocks are just, you know, they're just like, you know, in the bags, like for sure buys, okay? But I want to share with you 3 maybes, or we can call them even like 3 probably stocks that I'll probably be buying in the month of December 2020, okay? And these stocks I'm very excited about as well, okay? One of these stocks, the first one up here, is called the RealReal, ticker symbol REAL for this company, okay? This is stock number 1 of these 3 up here. It's a $1.22 billion market cap. This is a stock I don't own in any of my accounts as of right now, but it's really, really intriguing when it's around $12 to $13 right now, okay? Like I said, really small market cap on this company. Basically, if you have, let's say luxury items, like let's say you have a Louis Vuitton bag, you can sell it on the RealReal. And basically they have people that, you know, look at the bag, make sure it's real, things like that as the best to their abilities. a way better process than anything else that you could possibly do, and versus buying on eBay or some other site, right? They're just in a really, really interesting space, and in a space that is kind of niche down, and something like you always think about, like, could Amazon come after this? And I just don't see this being a business Amazon will want to get into, to be completely honest, and hire a ton of people to try to verify if that Louis Vuitton bag is real, or if that Hermes, whatever is real, and things like that. And so I think this is a pretty niche down business that is in a very special space, and I don't see there being actually any competition here long term, which is pretty darn exciting, okay? And when it comes to this company, huge growth expected, 36% growth expected next year in 2021. We're talking about, big numbers, okay? I mean, you look at the growth over the last few years, it's immense. 2017, they do $137 million. 2018, they do $207 million. 2019, they do $318 million. And obviously this year, their business has been hurt in a very bad way because of Rona, right? That's obviously hurt them massively. But next year, they should get back on the right track with, expected 30% plus growth again, okay? And the way I kind of view a company like the RealReal is I see these companies emerging as kind of the future of what I call just like clothing, accessories, the way people buy stuff, okay? I see Stitch Fix as being one of those companies. I see the RealReal. I see another stock I own, RVLV, Revolve, okay, as being one of those stocks, and Farfetch. I feel like those four stocks, I feel like some of those companies might buy each other out over time, or maybe they all combine and they make kind of like a big conglomerate or something. But I see those four stocks as just kind of being like the future of clothing, fashion, and things like that, and the way people buy a lot of these products moving forward, with the fact that a lot of department stores have gone under or going under, and just different ways people are looking to buy merchandise. So it's a very interesting stock, the RealReal, and it's definitely a possible buy for me in the month of December, and it could be a stock I start building a position in, and a decent size position. I can't build it into a crazy position because they are a money loser as of right now, but I could definitely build some sort of position in that stock, okay? Stock number 2 or 3 up here that is a maybe. This one I already have a position in. It's called Switch, okay? Ticker symbol on this one is SWCH. It's a $15 and some change stock here today. And this is a stock I already own a decent amount of shares in, okay? So Switch, I own 2,000 shares. I think this one's a public account, okay? I own 2,000 shares there. And then in my main private account, I own 1,500 shares in there so far. So it's a stock I already have bought some shares in, but I could definitely buy more shares of this stock moving forward, okay? Switch is a technology infrastructure company powering the sustainable growth of the connected world, okay? They operate these massive data centers, just game-changing like properties and locations, and the way they do things and the way they brand. It's pretty special for their industry, let's put it that way. As far as like their customer base, 36.8% of their revenue comes from their top 10 customers. They only have 0.2% revenue churn in the latest quarter, okay? Very, very low number. 5.3% revenue growth in the latest quarter, year over year. Obviously, Rona has messed up their business model in the short term to some sort of an extent, right? But, because usually they have people fly out, come see the facilities, things like that, and then sell there on the spot. It's not like that right now, obviously, because travel is just pretty much shut down. So, to still put up a 5% revenue growth number is nice, okay? 10.5% adjusted EBITDA growth from basically Q3 2019 to Q3 2020. A very nice number as well there. These facilities they build out are absolutely massive, okay? In the city I live in, mainly, I'm not living there right now, I'm in Arizona at the moment, but Las Vegas, my city, like we have many Switch facilities there, okay? That's the main market in terms of housing these facilities. And they're massive, okay? If you've ever driven up to a Switch facility, you know they're massive and they're protected very, very well, okay? Tahoe, they got a bunch of facilities over there. Grand Rapids, Michigan, they actually bought like this pyramid structure and built a whole epic facility in there. And then Atlanta, they have some massive facilities that have just opened in Atlanta over the last year or two. And, they have more future build out there for kind of their southeast locations and kind of getting all the companies that are in the southeast to come to the Atlanta facility for, basically housing their servers or things like that they can't have in the cloud, okay? Very compelling financial model on this company. 55% of the increase in Q3 2020 revenue was attributable to growth from customers who have been with Switch Switch for over 1 year, okay? So people that, their customers that are with Switch, they're spending more money with Switch. That's good, okay? While the remaining 45% of the increase came from new customers. So they're also attracting more new customers, okay? Long-term licenses, typically they do 3 to 5 year contracts with the ability to escalate rates over time. Stable monthly recurring revenue they have. 3-year average annual churn of 0.6%. So yeah, when you have less than a 1% churn for a business model, you're doing pretty darn well for yourself, okay? That just means your customers, they like to stay with you, they want to stay with you, okay? I mean, literally, any business model that has a revenue churn of less than 1% on an annual basis is ridiculous, okay? That's the best way I can put it. They have patent-protected technology that enables just-in-time CapEx deployment in low-cost construction. Vertical integration creates additional CapEx savings. Low maintenance CapEx of 1.6% of revenue in Q3 of 2020. And the company has over 950 plus customers. I expect them to be over 1,000 customers by this time next year. If you look at the revenue growth over the last few years, it's good. Like obviously some years are better growth years for this company than others, okay? A lot of that has to do when facilities open, when they can get some of these big customer contracts done. But at the end of the day, like what do you want to see? You want to see growth. You want to see growth in top line. You want to see growth in adjusted EBITDA. And this company has that, okay? Also, they're not just dependent upon like one industry or one sector or something like that. Very diversified. Like their biggest sector by far is cloud, IT, and software. That makes up about 25% of their revenue, okay? But I mean, look at that. They're all over the place. It doesn't matter what, business we're talking about. Like they like to use Switch at the end of the day, okay? As far as capital expenditures, this company's been spending a fortune the last couple of years, okay? I mean, look at the 9 months. They've already spent $240 million in capital expenditures. The numbers are massive. There's no doubt about that. There's no doubt about that, okay? But what I see for this company is in the second half of 2021 and moving into 2022, capital expenditures is going to go down massively, okay? Because they're going to have built out a lot of what they need to build out. And I think there's going to be a switch in this business model, which goes to just cash flow machine. That's the way I see this business. A cash flow machine that's going to enable them to basically start using that cash flow into new growth vectors and new sectors and new industries that they want to go into, okay? That's the way I see it. Because I'm just looking at their facilities and kind of the build out times, and that's just, honestly what I see at the end of the day. So I think that's pretty darn exciting if you're looking at the cash flows, okay? Revenue, as far as revenue for this company, 2019, they did $462 million. As far as a midpoint for 2020 guidance, $514 million expected. Adjusted EBITDA, $231 million in 2019, $264 million expected in 2020 as far as guidance, and that's midpoint once again. They could come in with a beat on that. Capital expenditures, $308 million in 2019, $310 expected at the midpoint. And like I said, the company's just spending a lot of money on the build out right now, and that should slow substantially in the second half of 21, especially moving into 22 and 23, okay? The company's pretty much one of the most sustainable companies of any company in the world. Like, it's really hard to find a company that's more sustainable than Switch at the end of the day. Like 100% clean energy index. It's amazing. They get an A on everything across the board. I mean, when you can even beat out Apple and Facebook and Google, that's pretty dang awesome. And companies like Salesforce, right? So yeah, the company's super sustainable as well. And they have an interesting new business they're going to be getting into this upcoming year that I don't even think a lot of people know about, right? It's called Switch Sentry, which is an autonomous security robot that can actually go around in different cities and facilities and things like that, that could actually be a huge cost savings to a lot of companies and a lot of infrastructure and things like that. And so I think that's a very, very interesting business model that I don't think anybody's even looking at that on Wall Street. But man, when you start adding up the numbers on what these robots will likely cost in terms of, a customer to get them, but it could still make huge financial sense for a company to get this or a city to get this or cities to buy many of these, right? And so it's going to be pretty interesting to see how kind of that transpires. If you want to know more about those like Sentry robots and things like that, they got actually a little epic 2-minute video on the website. You can just like Google like Switch Sentry and watch a video. It's pretty cool and pretty epic, okay? All right, guys, so that was Switch stock. Number 3 of 3, maybe / probably. And yeah, I'm going to probably buy a bunch of shares of this stock in December. High probability, probably even buy some tomorrow, to be honest. Probably should have bought some today, but I'll probably buy some tomorrow, okay? WBA, Walgreens Boots Alliance up here. It's a $38 stock. It's got a forward P of 8. And come on, man, we're talking about Walgreens here. A forward P of 8, that's just silly, okay? A dividend yield of almost 5%. So we're talking about massive dividend yielder, okay? So I already love this one going into 2021 because I feel like this is a perfect like turnaround play. I see a lot of things turn around for the right way for Walgreens Boots Alliance this coming year, okay? But also, remember those Rona shots that are going to start getting distributed all in 2021? Guess what? Walgreens is going to likely be one of the biggest like givers, in my opinion, of those shots out there. And with people coming in to get those shots at Walgreens, it's going to dramatically increase the in-store revenue opportunities for this company. It's not just about like, you know, they can make some money on giving those shots out. It's people are going to be coming in those stores and the next thing you know, they buy a soda and they buy a box of Band-Aids and they buy this and they're like, oh, let me get my, you know, my pharmacy needs here and things like that. So it's just massive opportunity for the company overall, okay? I did a video in one of the stocks featured in that was Walgreens. This was on Financial Education 2 a couple of days ago. It's called My Top 7 Dividend Stocks for 2021. So if you want to check out that video, go to Financial Education 2 and that goes into those 7 stocks. I think you guys will enjoy that if you want to, know more about the dividend stocks I am invested in essentially and, the cash flows that those stocks can produce and things like that. Hope you guys enjoyed today's video. As always, if you don't mind, smash a thumbs up. Helps the YouTube channel out in a massive, massive way. Also lets me know that you guys enjoyed me doing these videos each month. I appreciate it big time in the YouTube algorithm, okay? Also, if you want to join Stock Hub absolutely for free, you can do that. And you can chat with stocks. We have a ton of investors from all over the world. And we have categories for probably, all these stocks we talked about here in today's video. Like I said, it's free to join in there. If you want to try to apply for my private stock group and learn all the strategies on how I make money in the stock market, everything across the board, get access to the private Discord chat, things like that, check out the, like I said, I'll have it as one of the pinned comments as well if you want to fill out an application and try to get in there as well. Thank you for watching and have a great day.